Hey, welcome back for another deep dive. Today, we're plunging into a story that really shows how those lines between traditional finance and crypto keep shifting, especially in places you might not expect. We're turning our attention to Russia, specifically its largest bank, Sber, and their, surprising move into products linked to crypto. Our source for this is a recent article. It kind of lays out what Sber's doing, the regulations that allowed it, and, what it all means.
Yeah, and our mission here is really to unpack these new things from Sber, understand the specifics of the regulatory changes that made it happen, and sort of explore what this whole development tells us about where crypto and traditional finance are heading in Russia right now.
Exactly. I mean, why is a huge state-backed bank like Sber suddenly launching financial products tied to Bitcoin? Okay, let's unpack this source. Let's figure out the why and the how. So the big news, the headline grabber from the article, is Sber used to be Sberbank, right? They've rolled out a Bitcoin-linked bond. And what's interesting is how they've structured it. The source points out it's not just tracking Bitcoin's price.
No, it's tracking Bitcoin's price change and the dollar to ruble exchange rate, which is interesting.
Two factors, then.
Exactly. It seems designed to offer potential returns from both sides. Bitcoin's movement in dollars and maybe the dollar strengthening against the ruble. The source mentions it's already trading over the counter for qualified investors.
Over the counter. So not on a main exchange yet, more like direct deals.
That's right. OTC means it's trading directly, usually between institutions or, very wealthy individuals, bypassing a public exchange for now.
And qualified investors. Who does the source say that usually means there?
Yeah. Qualified investors in Russia, it typically means institutions, professional market folks, or individuals meeting pretty high financial requirements. So basically, this isn't for your average retail investor. Not yet, anyway.
Got it. Starting with the big players first. Makes sense. And the article does mention plans to list this bond on the Moscow Stock Exchange eventually.
It does, which would presumably boost transparency, maybe access, but still likely just for those same qualified investors.
Would.
And Sber, the article notes, really emphasizes that all the transactions for this product, they're in rubles, fully within Russia's regulatory system. A key selling point for the bank seems to be, look, investors don't need crypto wallets. They don't have to deal with unregulated platforms to get this kind of exposure.
That makes total sense coming from a big bank, doesn't it? Bringing it all into their established, regulated world. The source also points to Sber offering other products too, right? Something about exchange-traded products on their SberInvestments platform.
Yes, specifically starting with the Bitcoin futures product. The source suggests Sber expects this to be listed very soon. Apparently, the Moscow exchange is getting ready to launch trading in Bitcoin futures. I think the deep mention was around June 4th.
Okay, so Sber's got the bond, got futures coming,
Yep.
which leads to the big question, why now? What actually changed to let a state-backed bank do this?
Well, this move follows directly, after a significant regulatory shift from Russia's central bank. The source notes that on May 28th, literally days before Sber's announcement, the central bank issued permission for financial institutions to offer certain crypto financial instruments.
Okay, so the central bank opened the door. But what were the key details, or the limitations on that permission, according to the article?
Okay, so the permission is specifically limited. Only for accredited investors, again, those institutions and high net worth people. And here's the really, really crucial detail the source emphasizes. The central bank's permission explicitly does not allow financial institutions to offer cryptocurrencies directly to customers.
Okay, that's critical. So they can offer regulated products, like this bond or futures, whose value is derived from crypto prices.
Exactly.
But they can't actually hold Bitcoin for a client or sell you actual Bitcoin.
Precisely. The regulation draws a very clear line. Facilitating exposure through traditional regulated instruments like derivatives or structured products, that's okay for accredited investors. But letting banks handle direct ownership or custody of the actual volatile crypto assets themselves, no, that's not allowed. And this distinction fundamentally shapes the kind of crypto interaction banks can offer. It's usually cash-settled exposure, not giving the investor the actual crypto.
That distinction really is key to understanding what's happening here. It's not full crypto adoption by banks. And it wasn't just Sber, was it? The source mentioned another big player doing something similar around the same time.
Yes, T-Bank. You might remember them as Tinkoff Bank. They also rolled out an investment product tied to Bitcoin's price on the very same day, May 28th. The source calls it a smart asset and points out it's issued via a Russian state-backed tokenization platform called Atomize.
Atomize, what is that platform exactly?
The source describes Atomize as a licensed platform in Russia specifically for issuing digital financial assets, or DFAs. So just like Sber used traditional regulated instruments, T-Bank is using a different but still regulated part of Russia's digital asset framework, the tokenization thing, to offer Bitcoin exposure.
Interesting. So parallel approaches, but both staying strictly within those regulatory lines.
It really makes you wonder, though, is there actually enough demand for these kinds of products? Why are these major banks jumping in now, right after the rules change?
Good question. Does the source give any context on that?
It does, and it's pretty powerful context, actually, coming from the central bank itself. In their review for Q1 2025, the source quotes the report saying that Russian residents collectively hold something like 827 billion rubles worth of crypto on centralized exchanges.
Whoa, wait. 827 billion rubles? What's that in dollars?
Roughly $9.2 billion.
$9.2 billion already sitting outside the traditional banking system on crypto platforms. That's a significant existing market.
It is. And it gets even more interesting. The report also showed huge fund flows. Inflows onto Russian crypto platforms went up by 51% in that same quarter, reaching 7.3 trillion rubles, which is about $81.5 billion in flows in just one quarter.
Okay. Wow. So the central bank's own data shows a massive existing market and incredibly active trading involving crypto among Russians. That paints a very clear picture of the demand these new bank products are probably trying to capture.
Absolutely.
It gives the banks a really strong incentive to offer something, to bring some of that activity back into their systems.
But operating, of course, within those very specific new regulatory limits.
Yeah.
The ones that say no direct crypto handling.
Right.
Precisely. And the source also notes which assets are most popular on Russian crypto exchanges. Bitcoin, biggest share, 62%. Then Ether at 22%. Stablecoins like Tether and USDC are popular too, which lines up perfectly with Sber and T-Bank, starting with products focused on Bitcoin exposure.
So this isn't banks suddenly getting interested in crypto out of nowhere. Not at all. They're responding very clearly to large existing market activity that the central bank itself has documented. And they're doing it in the very specific way the central bank's new rules allow, through these regulated financial products, not direct crypto access.
Yeah, what's fascinating here is how that regulatory constraint, no direct crypto offerings by banks, totally shapes the kind of innovation we're seeing. Instead of banks trying to become crypto exchanges, they're becoming providers of crypto-linked derivatives, or these tokenized assets, all within their existing familiar infrastructure.
And Sber and T-Bank are moving fast to position themselves to capture that accredited investor slice of that documented crypto interest while sticking strictly to those boundaries.
It absolutely looks like a strategy focused on bringing the economic exposure, the activity tied to crypto prices, into the traditional controllable financial system, rather than trying to integrate the decentralized tech itself or the direct asset ownership part of crypto into how banks operate.
That makes things much clearer. It's about leveraging the interest in crypto's price swings while keeping the actual assets and the less regulated parts of the crypto world kind of at arm's length, at least for the banks themselves.
Mm-hmm. Which, raises a bigger question about how this whole space evolves. We see all this existing crypto activity among residents, huge flows. And now the big traditional banks are stepping in with regulated exposure products, but only for certain investors.
Mm-hmm.
So pulling these threads together from the source, what do we got? Russia's biggest bank, Sber, plus T-Bank, they've launched financial products linked to Bitcoin. Specifically, Sber's bond tracking BTC against the dollar and the dollar-ruble rate, plus Bitcoin futures are coming. This quick move happened right after the central bank gave permission for financial institutions to offer some crypto instruments.
Right.
But crucially, only to accredited investors, and without letting banks offer actual cryptocurrencies directly. And all this is happening while the central bank's own data shows Russians already hold billions in crypto and are actively trading it, giving the banks a clear reason to offer these regulated alternatives.
And it's so crucial to stress again, like the source does and we've discussed, this isn't the same as buying Bitcoin directly on an exchange. It's not that kind of exposure. These are regulated products built into the existing financial system, following specific rules set by the regulator. So it makes you think about the path forward, doesn't it? As mainstream finance engages more with crypto, this specific model we're seeing from Sber and T-Bank offering exposure through regulated products, not the assets themselves. It's a very particular way for traditional finance to interact with crypto. Does this kind of approach fulfill crypto's potential by making its price accessible in a familiar way? Or does it fundamentally change what crypto is by basically pulling it entirely into the traditional banking world, controlled and filtered through their rules? Something for you to consider as this whole landscape keeps changing, not just in Russia, but globally.